CFO at Total Carbon Neutrality Ventures, and Adelaide Krakow, the head of climate and environmental impact at the European Investment Fund. Have a great panel.
Hi guys, good to have you and good to have you in this panel. Welcome to Venture Summit. I think we're going to be discussing more the venture capital rather than the startup side at this point in time. The name of the panel is Where are the funding gaps in the energy tech? I think a very relevant, important question these days. A lot has been happening in our ecosystem. But before we kick off, I think we have very senior people on this panel. So why don't you guys spend, starting with Adelaide, some max minute each on yourselves as well as the organizations you're representing?
Sure. Good morning, everyone, and pleased to be with you all. So my name is Adelaide Krakow. I'm head of climate and environmental impact investment activities within the venture capital business of the European Investment Fund. So for those of you that may not be familiar with EIF, we are a European public institution, part of the European Investment Bank Group. Our mission basically is to provide access to financing for innovative and high growth European companies and ventures. We do so basically by partnering with financial intermediaries such as venture capital and private equity funds that have really the necessary proximity to market, to identify groundbreaking innovation and companies, as well as also provide valuable support. So we're really a long-standing and committed investor to the sustainability space. Our first investment in a clean tech fund dates back to the mid and early 2000s. We've remained pretty constant in terms of our engagement with the sector, both through its highs and lows, as we know. And we've been recognized as the industry, by the industry, as being one of the most active LPs of the decades in clean tech. So to date, we've invested close to 1 billion euros in sustainability-focused funds, ranging from climate and energy tech to agri-food tech and everything in between. We expect that our climate and environmental VC and PE activities to ramp up significantly over the next few years, reaching potentially an annual run rate of 1 billion euros, basically to further the policy objectives that are being targeted by the EU under the Green Deal. As for myself, I've been with the EIF now for close to 7 years. Prior to overseeing our climate and environmental activities, I was responsible for our life sciences VC team. My own background includes direct VC investing in early stage tech ventures, entrepreneurial experience in a social impact venture focused on housing. And my early career was developed in corporate finance, specializing in the pharmaceutical, chemical, and waste management industries. Cool. So again, pleased to be with you all.
Thanks, Adelaide. Appreciate it. Benoit, mic to you.
Thanks, Thomas. So I'm Benoit Savatier, CFO at Total Carbon Neutrality Ventures, the CVC arm of Total. So we have been around as a CVC since 2008. We are a $400 million fund that are supposed to be invested by end 2023. So we have a mandate to invest in early stage companies that are strategic to us, that are contributing directly or indirectly to carbon neutrality, and that are financially attractive. So we are looking at all the energy value chain, whether it is renewables, whether it is smart energy, smart grid storage. We are also a major investor in new mobility, like any oil and gas company, which has a large downstream business. We know that the value proposition of our gas station is rapidly changing and is impacted by all the new mobility stuff, being EV, autonomous cars, new business models like car sharing or carpooling. So definitely a space we are closely monitoring as well. The team is made up of 17 investors, mostly based in Paris and headed by Girish Nadkarni. We also have an office in California with 4 people there. We do invest globally, and we have something like 40 active startups in the portfolio today. And we also have LP positions in about 10 different funds. Concerning my background, I've joined Total 18 years ago. I was in charge of treasury and finance in the financial department. And at a point, I was leading the trading room for the treasury and for the treasury team of Total. Thank you.
Thanks, Benoit. So, Ines, we'll wrap up with your intro. I think, Ines, you're on mute.
Hello, everybody. My name is Ines Bergmann-Nolting. I'm managing partner at Future Energy Ventures. Future Energy Ventures today is the venture capital platform of E.ON. We have more than 250 million euros under management with more than 60 active portfolio companies. E.ON, as such, is an operator of energy networks and infrastructure in Europe, the largest one actually, plus a provider of customer solutions than more than 50 million end customers. Since 2013, I have had the opportunity to start our venture capital activities from the ground up, shape it, and adjust it to the market realities over time. I'm personally extremely passionate about the journey we have started with these activities on delivering a decarbonized, decentral, and digital energy landscape. And I'm eager to take it with Future Energy Ventures to the next level, meaning looking beyond energy and looking into the convergence of the different sectors.
Thanks, Ines. And we had E.ON's chairman and CEO yesterday deliver a great keynote, so it was nice to have some folks from here. So I want to start with really taking the temperature of what's happening in our space, in our ecosystem. Over the last 12, 18 months, a lot of new funds focusing on energy tech, mobility were popping up. We had big corporates, Amazon Fund, Microsoft Pledge Fund, Breakthrough Energy Ventures putting more money and billions of dollars into some breakthrough solutions, some moonshot solutions, some sort of money to maybe simpler businesses, but a lot of hype. Or a lot of excitement. Also had a bunch of record number of SPACs, also in the EV charging space, in the battery space, and hydrogen space, with some good stories, some worse stories like Nikola Motors. You know, a lot of stuff happening, seems like new headlines every single day. Sometimes stuff feels a little bit more too hyped up, potential unsustainable, but at the same time, it's great to see more capital flow into our industries. Maybe Ines, we'll start with you. How do you feel about this? Sort of, at least myself, obviously we all live in this world 24/7. I feel there's never been so much chatter and interest about this. What's your take?
So overall, I'm definitely absolutely positive about these developments. I think more attention and capital is needed and can only help grow the ecosystems. The last years, the crowd has been rather limited that was active in the space. Some CVCs and corporates are joining over the last year, but still a very narrow focused scene. And now with some of these general players you mentioned that are coming to enter the scene, I believe that there will be additional dynamic coming in, and that it's also might create more pressure for the existing or more traditional players coming from that scene to also give more attention to the space and eventually also more capital. Is it a hype? Yes or no? In the end, I think we all are responsible that the same what we saw in the mid-2000 years is not happening again, but that we actually contribute by our investment behavior with the new forces joining that table to not ending up in that downturn again. I think it comes to our investment behavior in the end.
Totally. And you mentioned Cleantech 1.0. Want to go to Adelaide and EAF as a long-standing climate investor. been investing in sustainability since mid-2000s, early 2000s. You guys seen the Clean Tech 1.0. What has changed? Why the history is not going to repeat itself? Why is it different this time, if it's different this time?
Thanks, Thomas. I certainly do think it's different this time, and I think we have lots of reasons to be optimistic. Those of us that were active in the first wave of clean tech obviously came to the conclusion that it didn't quite perform according to expectations. Returns were quite poor. Many companies didn't thrive, and as a consequence, there was a huge fallout in investors, so both VC investors as well as LPs. This time around, I think that the market dynamics are really there. There are long-term fundamental trends driving climate and energy tech. I think the foremost and most important is certainly the climate emergency that we're facing. I think nobody can deny that now, whereas, maybe a decade ago, the awareness wasn't quite there. Public policy is pushing for change. We're seeing new regulations. We're seeing new public investment plans. Corporates are also pressured to make that change and transform their businesses, in order to be more sustainable. And of course, there's this growing consumer awareness. So really, there's these fundamental trends that are driving market dynamics. And as a consequence, we should see a lot of innovation and more financing. I would say the investor landscape has also changed, and it's also more experienced, and we're seeing more specialized investors that can contribute a lot of value add beyond capital.
Thanks, Adelaide. And Benoit, Ines, do you have anything to add here, maybe from the more of a risk side rather than, why it's all so great this time? What still worries you about the current wave, if you can call it that way?
First, I would say that on our side at TCNV, Total Carbon Neutrality Ventures, we are quite happy given we have several portfolio companies engaged in SPAC mergers or in advanced discussions with SPAC. So we can expect a significant financial return on that, and it's always good when you are a strategic investor. So we really think that this time this is the time for clean tech and climate tech, whatever you call it. It's quite different from the first clean tech wave. Of course, as you said, Adelaide, there is the climate crisis, which is there, and the warnings issued by the scientists that nobody can deny. We know for sure that the impact will come faster and will be stronger than first expected. We see a lot of reactions from governments with setting up carbon neutral targets, for example, following the Paris Agreement or the European Green Deal. The society is changing on that, so we are really positive on that, and compared to what happened 10, 15 years ago, the technological innovation provides new solutions to the climate challenges with cheaper technologies. So we don't think we are in the same situation than 10 or 15 years ago for the first wave.
Then maybe one point I'd like to add. You asked on what's worrying us or what needs to change in addition. And I think one point I like to add, I think we have talked about it, alternative investment vehicles and raising capital methods like SPACs are rising, but I think another important aspect that also needs to change to make that sphere more attractive for investors, as well as that corporates get also more active in M&A in that scene, that there are more attractive exit opportunities for the startups in this sphere, and that trade sales and visible great exit opportunities are there for the startups, but also in the end for the investors to earn outstanding returns.
Yes, I think nothing can be more powerful than the success stories from within the industry, the sector, or from some of the well-known brands. Cool. Want to move to the main topic of the discussion. We still have funding gaps in the energy tech space, however way you look at it. And there's some flash announcements of breakthrough, Microsoft, Amazon, but especially if we look back at Europe, the market is slower. US seems to potentially be leading the way, well, at least from the headlines for sure. We're doing a lot of great stuff in the Battery Alliance, Green Deal, and other initiatives. But still, allocations to energy tech or electrification or the whole climate tech as percentage of the whole VC allocation and what LPs look at is still very tiny, sort of more or less drop in the ocean, though it's slowly growing. Why do you think we still have these gaps? Is it the hangover from clean tech 1.0, performance issues? What still needs to change so that the old school LPs start looking into it much more than they are now? Whoever would like to kick off.
Happy to do so. I mean, I think past performance is certainly, how would I say, still haunting the sector, so to speak. In that, a lot of investors that were burnt at the time haven't come back, and are a little bit wary of clean tech in general. Notwithstanding, we are seeing generally better fundraising momentum on sustainability-focused funds. There are new investors coming to the market, and funds that a few years ago, struggled to reach their target fund size are now actually reaching their hard cap. So there is a general interest in sustainability, with energy, of course, being a core theme. So performance, again, still plays its role. I think that given the market dynamics that we just discussed, that are much more positive than they were in the past, this should hopefully provide more comfort to investors that are considering, investing into energy tech. I like to draw parallels with the life sciences sector. So the life sciences sector was a bit in the same situation that climate tech is today. A few years ago, the very limited LP interest, also quite a burnout in the 2000s. The sector didn't perform well. Many felt that the underlying investments were too complex, too capital intensive, took too long to materialize, and actually, all of this has changed over the last few years. So the life sciences VC sector is actually outperforming in many respects tech. Those fund managers that are supporting groundbreaking innovation are seeing outstanding returns. There is a lot of appetite from corporates, as was just mentioned, to acquire innovation. So, and again, the underlying, I would say, drivers are there, just like in climate tech. So I think it's just a question of time before climate tech also sees its coming of age.
Okay.
Yeah.
Benoit, Ines, then staying with this topic, then performance, exits, as Ines mentioned, super important. Again, can compare to 1.0. What do you see in the market in terms of the performance, in terms of the success stories, either in your portfolio companies or what do you see with other companies who haven't invested or peer VCs have invested? Do you think that's coming? We had some great mobility exits, IPOs. Again, that's not necessarily sits within the whole climate tech space. Various ways to slice and dice it. But what's your take? We had some corporates like Shell buying a bunch of companies, Zonance, Lime Gems, and so on, sort of very helpful to get the sort of exits out, the name out, and so on. How do you feel these days about the performance? I know, Benoit, you mentioned SPACs, great liquidity for all the investors, can recycle that capital back. But apart from SPACs, how do you see it?
Sorry, I would say that part of SPAC, the market is still a little bit slow. We don't see we see a little bit of M&A transaction from a large corporate, but not that much, particularly in Europe. So I think it's still something to come. We see more interest for sure, but it's still a little bit early. We see some. Just coming back to your point on the funding gaps. I don't have a full list in mind, but we see some sectors like new stuff like hydrogen, that sector we are looking at, and we are speaking a lot about hydrogen those days. But the number of investors in that space, notably in terms of new funds, is still pretty limited, particularly in Europe, despite significant initiatives from the institutional investors and the governments of the European institutions. So there are still some gaps on those kind of sectors. And in terms of exit, it will still take some time to see acquirers for those companies.
Okay.
Maybe one additional thought I'd like to add. I think of course the range is not that broad. Yes, there are some cases, and you just mentioned some of them with Zon, Lime Jump, etc. But I think another factor is in that those cases are often just noticed within the community. It's often not a case, as for other sectors, that is noticed and also celebrated in a sense by a broader audience and community. And I think that also still leads to the fact that investors are a little bit hesitant, or LPs, to that sector.
Totally. I mean, brand is so important, I guess. Much easier to get the public attention when you're doing something B2C related than selling to B2Bs and getting the name out there. One thing would like to ask Ines and Benoit, software versus hardware debate, because that sort of links to the performance issues in the clean tech space back in early mid 2000s. One of the reasons why it didn't work, it required insane amount of capital, hugely capex intensive businesses, super long duration, and so hence now when we speak to other VCs, we often hear, look, investors, don't worry, we don't do hardware, we only do software solutions that are venture scalable, blah, blah, blah. So, don't worry about putting the money in. 10 years, fund term, we're going to return the money back. But at the same time, sort of always debating with myself, is it truly the way to go? Is it a good way to get rid of anything that has hardware in it and sort of pursue just software? I think might not be, helping the goal of the whole climate change that much. And there's a lot of real important technologies that has hardware, it has to have hardware. How do you guys look at this? Probably both of your funds have the thematics. How do you think about software versus hardware, and about the performance then related to that? Maybe Ines, you can start, and then Benoit can chip in. Yeah. So what you have been describing, that trend that investors go rather to the software side than to the hardware side, for sure. I think it has been also true for us and our investment focus. However, what I still see is that we need to be a little bit more differentiated. It will not be the one or the other, black or white, that software is with certain examples from the hardware case late or combined. And if you look at our portfolio, actually there are some cases where we have had also successful hardware companies. And I think also for the future, we need to pursue it in a similar way. The focus will remain on software topics, but in a very selected way to combine it with hardware topics.
because both in the end is needed. In particular, if we're looking to E.ON and we're talking about infrastructure, there will be some instances where hardware topics will be required, but I think we all need to be aware and plan it that there is a certain longer breadth for these topics to be taken into consideration.
I fully agree. Like any other investors, after the first clean tech wave, we've done much more software companies investing in platform or stuff like that, which have been quite successful, and the investment cycle were much shorter. But yeah, as you said, Ines, climate change will take some hardware as well, and I think hardware are coming back a little bit. As I was mentioning previously, we are, for example, currently setting up an hydrogen fund of 2 billion euros that will invest in will make equity investment, but in infrastructure companies, infrastructure projects, hardware projects. And that will federate several anchor investors in that space, and we see good traction on that part. So I think hardware are definitely coming back. And maybe a way to do that, a way to achieve that is to apply much more of what we call blended finance. So using a mix of public funding and private funding, and I'm sure Adelaide will be happy to add on that. But you know, European venture funds alone, they can't provide funding for all the deep tech companies we see in the market, and in some cases they can't provide funding for the time period needed for the hardware companies. So in my mind, it would be super helpful to see much more structure with junior equity investments made by government, for example, or made by European institutions, de-risking a little bit the private funding. And by doing so, we will attract much more private capital from institutional investors in hardware projects. So I think we're on the way for that, but we need to accelerate a little bit.
Great. Agreed. Yes, I think definitely the likes of ET, energy, and these type of players play an important role. I think industrial scaling of hard tech is super important, but it takes a long time. So public-private partnerships, blended finances, infrastructure financing. That I think a lot of that stuff EAB is doing together with EAF. There's some great initiatives. That's super important. Right. Wanna quick question about generalist VCs coming into this space. That happened back in 2000. Sort of Kleiner Perkins saw the opportunity, opened the fund, sort of moved bunch of brains and capital into it. I think didn't work out as much as I know. Now we see so many deals become so much more competitive. That's because generalist VCs that haven't done energy tech or electrification thematic, just pouring money, carving out pool of capital and pouring money into the sector over the last probably 6 months. I don't know, it quadrupled, at least what I see. That people say that sort of comes and goes fast with those type of funds potentially. Maybe this time is obviously different. How do you guys see the generalist VC role in growing the energy tech investments? Open question, whoever would like to start. I don't know, Adelaide, great.
Happy to start. I mean, I think it's actually a positive development, and I hope they'll certainly stay. I think obviously they need to piggyback on more specialist investors that really understand the underlying technologies, products, the industry challenges and interests, and that can provide, again, that sort of value add beyond capital and really help these companies to progress both in their technological development and also commercialize, eventually their products and technologies. But I think that the capital is additive. There isn't sufficient money in the market now to really address market needs and the climate change challenge. So I welcome generalist investors. Alongside that, though, we need a very robust and strong specialized investor ecosystem. From the EEF standpoint, we're certainly being quite deliberate in terms of the fund managers we support. And we really want to ensure that sort of depth and breadth, and also that ability of the specialized investor ecosystem to endure and contribute, for the long term.
Thanks. Ines, Benoit, you have any opinions on that? One, do you see a lot of generalist VCs coming into your deals, maybe for follow-ons in your portfolio companies?
It's always positive to see new kind of investor joining the rest of the crowd for tackling climate challenges. So that's a very positive development in my mind. What we need to make sure is that those guys really understand what they are doing, and they are making the right assumptions regarding the speed of the growth of those companies, and doesn't make the same mistake that the one they did back 10 years ago or 15 years ago. So overall, still happy to see traction for the startups we are looking at, and see new investors putting money there.
Okay. Benno, I'll stay with you for 1 sec. As you mentioned, as I know, Total, TCN does both a bunch of direct investments and some very successfully, and you also have funds of fund strategy. Why are you guys doing this? What purposes does it serve for you? What's the main goal? To get more deal flow at maybe earlier stages, diversify, establish relationships, help the ecosystem. Can you talk a little bit about it?
Yeah, sure. That's a very good question. When everything started 12, 13 years ago, when Total built the VC team with internal people. So my colleagues at that time, they first invested in a couple of clean tech funds. I think this was the best way to start, interacting with the ecosystem, establishing the right relationships, getting connected to startups, learn how to make VC deals and so on. So I would say that today we have quite a different approach in terms of fund investment. The team is much more mature. We have 17 professional investors in the team, and the money we allocate in funds or in direct investments is coming from the same pocket. So that's why we have to be more selective in a way when considering investing in new funds. So I would say that today we are looking at funds in two specific cases. The first one is when we want to start exploring, for example, new geographies, so where we don't have local people, and where we need we don't have resources to spend time there on the ground to explore the local ecosystem. So this is the first case, and it was by the way the case when we made our first investments in China back 3 or 4 years ago, and we decided to go and partner with Cathay Capital there in building a smart energy fund investing in Chinese startups. The second case is when we want to dip our toes in a way in a new sector in which we don't have any internal expertise. So doing it by making just a single direct investment in one company would be much too risky, and the learning would be limited. So in such case, we believe the fund approach makes a lot of sense to us. So that's today the two cases where we see a lot of interest by partnering with funds.
Okay. Ines, what are your thoughts on it? Have you guys thought about funds of fund strategy? I think out of your 250 billion fund, you've been doing direct investments, you have a big team. Would you consider addressing those gaps in terms of geography or stage or sectors by doing FOFs, or not in your mind at the moment?
Yeah, I think, as I said in my initial statement, I think E.ON has gone the path and explored many ways, has explored definitely the direct path very well. We have done some fund investments, but very, very limited. So, and in the moment, that's still the strategy for now, to focus on direct investments. But of course, with the reset of the company, with the merger, of course, it's also a topic where we're looking into for reconsideration. How do we best adjust for the future? So not excluding it fully for the future. But in the moment, the focus fully remains on the direct strategy.
Understood. Thanks, Ines. Adelaide, a quick one. When EEF is investing, often as an anchor into sustainability-related GPs, what ideally you like to see as other LPs come? Who other LPs do you like to see? Would you ideally love to see coming in next to you guys? Is there a preference, or you try to encourage some of the types of LPs to come in and join? Any thoughts on this?
I can't say that we really have a preference. Obviously, we like to invest alongside like-minded investors. What we are seeing in the sustainability space, of course, is more interest generally for ESG and impact. So we are seeing sort of new LPs coming not only to energy tech, but to other areas of sustainability. And there is an increased emphasis certainly on impact. We ourselves are implementing an impact measurement methodology and also requiring GPs to link a portion of their carry to impact measurement and achievement. And so, in terms of preferences, I can't say we really have preferences. We do like to see other investors as motivated by impact as we are. We would like to see more capital generally coming to the market. And again, there is growing interest amongst insurance companies, pension funds, and we'd like to see more of them present.
Adelaide, if you don't mind, I'll stay with you. And we've spoken about this a little bit before. EEF does much more as an institution to address this funding gap in energy tech than just doing direct investment into the GPs. Now we spoke about Invest EU program and other public policy things. Can you give a few bullet points on what you guys doing?
Sure. No, again, given our public nature and the fact that we are pursuing sort of specific policy goals, we are becoming much more thematic, I would say, in our investment activities. And of course, given the European Green Deal and the upcoming Invest EU program, sustainability and green transformation are really going to be top of the agenda. We anticipate that we will have a lot of resources actually to direct towards sustainability focused funds, and energy and transport and mobility in particular will be core areas of focus. I would say that beyond the capital, though, we also like to sort of set new standards for the industry, in the impact measurement methodology being one of them, in the sense that we do want to see fund managers increasingly sort of walking the talk. We think that there is a risk of a little bit of greenwashing, given now sort of the momentum around impact and sustainability. So we think that, impact measurement will be key, the setting of goals and ensuring this economic alignment with GPs. Beyond that, also, it's very important for us to support new and emerging teams where we feel that, we can provide structuring input and really bring their first funds to institutional grade. So that's a bit of an overview.
Awesome. Thanks, Adelaide. Ines, Benoit, a quick one then, as we're sort of running out of time slowly. The greenwashing, super interesting to get your thought discussed with different investors. Do you see a lot of it from everyone, corporates, governments. Everyone's announcing carbon neutralities, cities and countries by X amount of date. When you start reading what's inside, means very, very different things. Net zero and carbon free, that's very different things. How do you deal with the greenwashing, and what would you like the industry to do to deal with it? And because it's potentially quite damaging sometimes, right? I mean, it's maybe Ines.
Yeah, I think, as you said, I think it's definitely important to be very careful and look behind the scenes. What does it exactly mean? However, I think the mindset has changed a lot in many things. I think everybody has understood that it's only one world we have, and it's not a topic for idealists and pioneers to look into with those topics. And I think also with corporates, that's it's showing the most understand and that it's not a nice to have anymore, but that those aspects are in the end tied to financial success. And I think as we look for startups that they're including all these measures into their thinking and processes. I think the same is happening now on corporate level as well. That within the internal processes and structures, sustainability and ESG topics become a key role, and that it goes beyond prospect status and greenwashing perspective.
Thanks, Ines.
I fully agree with Ines. I think we have, we are beyond greenwashing now, and the huge amount of money on the table to invest in climate tech startups from various corporates like you and us, and from various institutions show that it's not a question of greenwashing now. It's for real, and we are all investing and we have all understood the climate change challenge, and I think the entire society has changed on that as well, and any greenwashing wouldn't be accepted today. Except a minority of people, I don't think the greenwashing should be an issue any longer. And now everyone is focused on the next step.
Okay, good. Final wrap-up question for all of you: if you could change one thing in the European ecosystem that could address this funding gap, that could help our ecosystem thrive, or there are some things that just have to be changed, what would that be? Could be anything, taxes, regulation, and so on. Whoever wants to start.
Happy to take it. I think one thing I think that needs to change, and that we at FEF believe very strongly in and are actively doing, is not to look by our funding at one particular sector, one particular specific problem to the energy sector, but really look at the convergence of the sectors. And I think that's a topic I think that needs to happen even more on a broader range by us, but also supported by other investors, that the things like mobility and energy and housing, energy and construction, infrastructure and mobility, that the things can grow together. And I think that's a significant effort by everybody. And it's not enough to look at single problems with single pouring of capital on that particular problem, but to look at it more from a systemic view.
Thanks, Ines. You guys got anything?
No, I just wanted to mention something I've already spoke about, is blended finance. I think this could be the main change we would enjoy. I think there are tons of money, tons of cash in the market that are looking for investment. So if we can help driving this money to the right place by providing investors with some comfort in terms of risk, I think we could achieve very big things.
Cool.
And it will take some public support. It's already the case, but I think on that part, United States are doing a little bit more than us, and I think in Europe we should try to keep to do a little bit more on that space. Yeah.
Thanks, Benoit.
Maybe just building on Benoit's comments, I mean, I think certainly there's room for improvement in terms of the financing options available to European ventures to really, develop and scale their products and technologies. I think there's also an opportunity to really enhance stakeholder engagement across the board, between startups, VCs, corporates, and really bring the industry together. And I think in Europe, we have one sort of to-do pending, which is, retaining basically, our European entrepreneurs and companies, because unfortunately, sometimes because of the lack of funding or, better opportunities they see abroad, they tend to leave. So I think, our ability to really grow and build category leaders in Europe is important. And anything we can do there to help is welcome.
Totally. And again, comes back so much to the success stories, right? If people see it happening here, not leaving, if we saw Spotify, in Europe, listing and so on, it would help. Anyway, guys, we've got to wrap up. It was fantastic to hear thoughts from such a senior crowd. So Benoit, Adelaide, Ines, thanks again for being with us today. Appreciate it.